Wednesday, January 19th, 2022, Monaco 64, home of alternative economics and contrarian views. So looks like silver is woken up. I think you need to hold on to your physical silver. I think it's going to be a wild ride, and it has been, so to speak, in the last 2 years. One thing I like to talk before we look at silver and the technicals and maybe some of the fundamentals behind the silver market too, and the history. Just wanted to say that patience is a really important virtue, I guess, to have, not just in investing and in saving, but also in general in life. From the years that I've been on this planet, yes, what I've learned that is really important is that things don't happen right away. Sometimes, yes, you do get lucky and things seem to happen right away. Things that you think should happen and that you want to happen. I'll give you a quick example, and this is to do with golf. Before I started playing golf when I was about 15, I used to play a lot of tennis. I wasn't really too good at it, I would say, as good as I became in golf. Prior to that, I used to sail because my dad used to sail, so I had a little dinghy. But when I started playing golf, I really caught, they call it the golf bug, not gold, the golf bug. You start playing and you can't, and you fall in love with the game. It's a very interesting game. And I went to university in the States. I wanted to try to make the team. I wanted to become a professional, but it didn't work out like that. I wasn't good enough to be on the golf team. And even when I arrived at the university, because I was from Brazil, they thought I wanted to play soccer. They had a soccer team, and I said, I don't play soccer, I don't play football, I play golf. But anyway, it was only a few years later, after I finished university and I was living in Switzerland and I started working, that my golf flourished and I actually became a pretty good player, amateur-wise, for Swiss standards. I played in a few national championships. I made a few cuts. So, but it took a lot of work. Even then, I was going to the driving range and practicing, hitting hundreds of balls every day. But one thing that I did is I wasn't looking to reach the level that I actually did. And so what I'm trying to say here, sometimes you just need to do things and not expect too much and be patient. Sometimes it happens later. And it's the same thing with markets and the same thing with silver, I would say. Last year, the silver squeeze movement actually started right at the end of January, on the last weekend of January. I remember it well. It was January 31st, and we had Wall Street bets, and the silver squeeze was starting. And to be honest, I thought silver would be a really good thing for young people to get involved in, because that would really hurt the bankers if they really want to hurt the bankers. And unfortunately, there was a guy called Max Kaiser who used to say, buy physical silver and crash JP Morgan. Well, he's been kind of put in the spell for a computer program, and he's abandoned ship, of course, the silver ship. I guess he's not patient. He wants the quick buck. But I think, yes, I've been in this. I've been stacking silver since 2003. Billy's been stacking silver. He's the original silver bug, Billy Bullion. But anyway, at least it's given us a year to keep stacking. And it's not easy to stack. Why is that? Well, because you have to have a tight fiscal ship yourself. You have to run a fiscal ship that is tight. You have to have extra fiat to accumulate the silver. And the prices actually haven't really come down that much in terms of the actual physical price. But we've been noticing lately that the supplies on Comex have been draining a lot. And yesterday, right around the time that the Empire State or New York data came out, I think it's Empire State manufacturing data, and it was a negative number, was expected quite positive. Silver just squeezed higher after that number. I think it comes out at 8:30 Eastern time. And it was very unusual. I think I even joked on Twitter, did the CFTC make an error on their trade to tamp down silver? But it was a really big move higher. And so what's happening? Do we really need to know who's buying and why it's happening? I guess some people do want to know. I saw someone tweet that maybe people are starting to realize that silver is a very important strategic metal for this new green agenda, the renewables. And not just that, but also in technology, all the electronic devices that we use, there's silver in it. And aside from that, investor or the silver bug, silver squeeze movement is making a difference. There's a lot of demand. And it's ironic that last year there's a lot of demand for silver and the price went down. Well, we know what that is. We know that the bankers hate silver. And why is that? Well, you just have to go back in history to see what silver is. Silver is money. And this is where I'm going to recommend two really good channels I've only found out about in the last few weeks. One is called Classical Numismatics. I think I spoke about this channel a few videos ago. They talk about a lot of silver coins, but also gold. They talk about empires, how the debasement of the coins coincided with the fall and collapse of those empires. Really interesting channel if you're into history and into money and into even collecting coins, which I do as well. Aside from stacking bullion, I like collecting old silver coins. And the other channel I also found out about recently, it's called Told in Stone, and it's all about the history of the ancient world and mostly Rome. And they've actually done a collaboration. Their latest video, they did a collaboration with Classical Numismatics, and the video is called 1,000 Years in History of History in 12 Ancient Coins. And Told in Stone is run by a guy called Garrett Ryan. He's a PhD in Greek and Roman history, taught at a few universities before leaving academia. It says, these days I spend most of my time writing, traveling, and of course, making videos about ancient history. I think it's really fascinating and really interesting, those two channels. And yes, as I was saying, the bankers, they don't want you to be in the silver market. And that's why they came after Nelson Bunker Hunt, the Hunt brothers, in 1980. That was a time when the Federal Reserve note, aka US dollar, almost collapsed. And they had to change the rules of the game on Comex. And that's why I try to tell not just small investors, but big investors, family offices, hedge funds, you need to buy physical outside the banker's market. I know for some hedge funds it's probably not something doable because their rules and statutes don't allow them to do that. But I think that's why physical is so important. You need to avoid ETFs. Yeah, I know some people think PSLV is okay, but can you get the physical from PSLV? That's the real question. And when push comes to shove, I know some people, well, most people trust Eric Sprott, but it's not a matter of trusting him. It's a matter of trusting the people he's dealing with. And he's going to be dealing with the bankers, I bet, and Comex. So that's why physical is so important. That's why stacking is so important. And we need to keep doing it. And as I said last year, I was on this panel and we were up till past midnight here in London watching Comex. And we got up to 30 and people were very excited. And knowing how these markets can be, I said, well, I think this is a good movement, the silver squeeze. We see younger people getting involved, and I think it hasn't changed. But I said we need to be patient. I wasn't as enthusiastic, not because I don't think silver is going to go a lot higher, and it's not even going higher. I think silver is just very undervalued against all other assets in the world, gold included. So let's look at some charts. The first one I'm going to show you is the mother of all teacup formations. These are very bullish formations that form from like two double tops, if you want to call, and between those tops there's like a cup formed, and then there's the handle formed, and once we break the handle, that particular market is off to the races. The thing about the silver teacup is that it's a 40-year teacup. Yeah, 42 now. So it takes a long time. And as you can see, we've broken through the handle, but it moves slowly. It moves in years. So the move we made yesterday was very positive. You can't really see it here, but this is a logarithmic chart. And some people have been saying, well, if silver breaks 30, we could end the year at 35. That might be so, but I have a feeling that, and I don't know when silver is going to break 30 or go to 35, but I think when we do break those two numbers, it's not going to be smooth sailing. It's going to be like up $5 one day, down $2. It's going to go crazy, and we're going to be very close to 100 once that happens. That's why I said you got to hold on to your silver. The second chart is, of course, a shorter term chart I wanted to show you. And this is a weekly chart going back to last year, just before silver, well, actually 2020, or is it 2021? You know, yes, March 2020, when silver went from below 12, almost in a straight line up to 30. And you can see that the consolidation has been quite a long one. And there's like a little triangle that's formed since the double tops that we had in August of 2020 and then 1st of February last year. And we're getting very close to the top of that triangle. Right now, this week, it would be around 2450. So I think that's the key level there. The other chart I wanted to show you is the chart of the gold to silver ratio. So that's the price of gold, of course, and silver. That's how many ounces of silver you need. Historically, that ratio has been around 15 to 16 to 1. That's where bimetallic systems have been set at. Bimetallic systems that worked really well. I think the British one was around 14.5 to 1. Some people think silver could even outperform that ratio, and some people see it at 7-1 or 8-1, but we need to take it one step at a time. But one thing that is interesting is that the 80 level, looking back in the last 30 years or so, that's been a really key level. And of course, in 2020, silver got really undervalued, especially versus gold. It went to like 128 almost. But as you see recently, we've gone back up since, of course, the summer, well, actually the beginning of 2021. And we've been testing this 80 level. And yesterday, of course, silver outperformed. Silver was up 2%. Gold was unchanged, slightly lower. So I've always said in the last, well, since I started this channel, that to see a full-blown precious metals bull market, you need to see silver leading the way. So this is quite encouraging. And again, am I saying this is it now? We're going to go higher. We're going to see gold and silver outperform versus other assets? No, but it's encouraging. Markets are never certain. It's all about probabilities. Either way, it's not gonna change the way I react to these markets. I'm still gonna keep trying to stack as much as possible. I'm still in the mining stocks as well. They're undervalued as well. And just before we look at the markets, just wanted to show you here something that Tavi Costa, who I've had on this channel a couple of times, from Crest Capital in the US. They're a hedge fund, and this is what he put out yesterday. He said, bring it on. The gold to S&P 500 ratio looks to be breaking out from almost a year-long downward trend. My 2 cents, this is beginning of a move, not the end of one. So if silver is undervalued versus gold, and gold is undervalued versus the S&P 500, and I'm not saying I'm selling my gold to buy silver. I'm keeping both. Personally, I'll probably favor silver if I'm going to stack. So there you go. Let's quickly look at the markets. It's 8:53 a.m. London time. And the stock markets, they've had a bad start, especially the US stock markets. This year to date, we've got the NASDAQ, that's led the way in this bull market, is down 7.25%. S&P and Dow are not down as much. And again, right now, the bond markets are in trouble. Prices are continuing to drop and yields are rising. I think maybe investors are waking up, not because they think the economies are doing well, because if that was so, the stock market would be doing well as well. I think this is not a good sign. How long will central bankers remain hawkish? I don't know. But let's start with the bond market today instead of looking at gold and silver first. Well, the 10-year yield reached 1.9% overnight. It's up another 2.5 basis points. So we could reach 2% very quickly before the end of the week. And more importantly, this is not just a US bond thing. This is a global bond move. We've got the 10-year gilt. That's the UK yield. That's up 5 basis points. We were around 0.7 late last year. And we're breaking some key levels. We're at 127, which is very low. We've got RPI, the retail price index, rising at over 7%. And the same thing goes for Germany, which is one of the biggest and most important bond markets. Well, I would say it's probably the most important one after US Treasuries, the German government bonds. And right now, it's crazy to say this, because it sounds outrageous, especially if you've worked in the bond markets like I did for many years. We actually positive. The 10-year bond yields is actually yielding 1 basis points. No, that's not 1%. It's just above 0, but it's been negative for the last 3 years almost. So this is very significant. So back to the market report, the usual report. So we've got spot gold up $2. We're at 18.15.70. The high's been 18.16, the low 18.10. I think yesterday we got to 18.23. 18.30 is the key level still. What about silver? I would have expected silver to be down because they usually do that after a day that silver's done well, but we're not. And who knows, by the time you listen to this video, it could be down. But right now, we're up 21 cents at just below 23.70. And just another quick chart here on the daily. And just another quick look at that weekly chart. As you can see here, that 23.40.50 level was very important. That had been the high since the end of November. So that's very significant as well, the fact that we've broken through 23.40.50 area in silver. So this morning or overnight, the low's been 23.38 and the high 23.70. So we're near the highs. The Dow future is down 42. The NASDAQ future is down 22 points. And the S&P future is down 6. So the stock markets are a little stable at the moment. They haven't dropped bigger. So the stock markets are holding for now. We'll have to see how that pans out later on. The FTSE is down about 13 at 75.57. To the currencies, sterling is up slightly, just below 136. The euro is up about 0.1% at 113.35. The dollar is down 0.15 versus the yen at 114.45. And the dollar is continuing to drop versus the yuan. We're at 635.20. To the other currencies, we've got Aussie dollar up slightly at 71.90. The dollar is down about 0.15% versus the Canadian dollar at 124.96. And we've got the Kiwi dollar up 0.25% at 67.85. And we'll finish off with the general commodities. We've got WTI crude continue to move higher. We're at 85.25, up 0.5%. We've been as high as 86.41, which is like a 7-year high. I saw Goldman Sachs talking about 110 or 130, was it $110 oil by next year? They could be right. Who knows? High-grade copper is up over 1% at 443. And yeah, that's it. We've looked at the bond market already, so I'm not going to look at the 10-year yield. But as you've seen, it's continuing to rise. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.